Let me ask you something directly. If you had seen the 2022 crash coming, would you have acted differently? What about 2019? What about 2015? Because right now, in real time, the same pattern from all three of those cycles are playing out again. The same on-chain signals, the same investor behavior, the same emotional mistakes. And most people are about to repeat history instead of profit from it. So in the next few minutes, I'm going to show you exactly where we are in this cycle, what the data is actually telling us, and what the prepared investor is doing right now, while everyone else is panicking.
No, not again! The charts are crashing! It's happening to us now! I can't watch! The losses! Run! Before it gets worse! Sell now. It's crashing! It's in Run! Get out!
Let's start with a signal that should have every serious crypto investor paying close attention. Short-term holders, the people who bought Bitcoin in the last 3 to 6 months, are currently selling at a loss of the exact same rate as a 2022 bear market bottom. Read that again. The same rate, the same psychology, the same capitulation behavior. Now, when most people hear that, they think this means more pain is coming, and they are partially right. But here is what the historical data actually shows. This level of short-term holder loss is not a signal that the market is breaking down permanently. It is a signal that the weakest hands are leaving. In 2022, this pattern appeared right before the floor formed. In 2019, same signal, same result. In 2015, identical behavior preceded the next major bull run. The pattern is not random. The market is following a script, and the script is readable if you know what to look for. Now here's where I need to be honest with you, because most analysts will skip this part. Bottoms take time. They do not happen in a day. They do not happen in a week. Based on every previous cycle analysis, we are approximately 100 days away from a true, confirmed bottom forming. That means this process is not over yet. The market could still flush down to the $55,000 to $60,000 range before the real recovery begins. That is not a doom prediction. That is what the cycle data suggests is possible and the prepared investor plan for all scenarios. So if you are sitting here hoping for an immediate reversal, the data says be patient. If you are sitting here expecting total collapse, the data says that is not what the patterns show either. The truth is somewhere in the middle, and the investors who accept that truth, instead of fighting it emotionally, are the ones who position correctly. But here's the other side of the picture, and this is a part that gives real confidence. ETF inflows are absorbing sell pressure. Every time short-term holders panic sell, institutional ETF buyers are quietly on the other side of that trade. This is not speculation. This is visible on-chain and in public ETF flow data. Smart money is not running away from this market. Smart money is accumulating, slowly, quietly, without announcing it. Second signal worth watching closely. Short-term holders are beginning to reaccumulate. Even within the same group that was selling at a loss, a portion is now buying back in at lower levels. That behavioral shift is subtle, but historically it appears right before the bottom confirmation phase begins. And the third signal, perhaps the most powerful of all, net realized profit and loss is sitting at levels identical to the lows of 2018 and 2022. Both of those moments, in hindsight, were generational buying opportunities, not because the bottom was immediately obvious, but because the data was saying what the news was not. The data right now is saying the same thing. What the prepared investor does now. So what is the actual move here? First, do not panic sell into the flush. If you sell now based on fear and the bottom forms within the next 100 days, you will have locked in your loss and missed the recovery. That is a mistake that gets repeated every single cycle. Second, do not overleverage trying to catch the bottom. Nobody catches the exact bottom. The goal is not perfection. The goal is positioning yourself in the right zone, so when the recovery comes, you are already in. Third, watch the signals, not the sentiment. Social media will tell you the market is dying.
2015,
the data will tell you the structure
bottoms,
is forming.
but patient
Choose which one
hold.
guides your decisions very
2019,
carefully.
The
next 30 days
multiplies
will either
the bull
confirm
under
the bottom
test,
is forming,
another recovery,
or deliver one
well,
final
no
flush to
inflection
clear the
point.
last of the weak hands. Either way, the prepared investor wins, because they have already planned for both outcomes. The same pattern from 2015, 2019, and 2022 are playing out right now. The investors who studied those cycles did not just survive them, they built life-changing wealth coming out of them. You now have the same information, the same data, the same roadmap. The only question is, are you prepared? If this gave you clarity, subscribe. This is the analysis we bring every single week, so you are never caught off guard by what the cycle does next.